Good morning from Europe. It's the first day of April, Wednesday, and we will be with you with the short market update. As always, we're going to check the markets, the news, political, geopolitical, economical, and whatever that can change financial markets. If it will not be the April 1st law, Donald Trump says that war in Iran can be concluded in next 2 or 3 weeks. That was the reason that we could see positive reaction in the stock markets. Yields fell, gold increased, and oil price with the gas price eased. The market now talking about the future of Hormuz Strait. I mean the security from the security side, as Donald Trump says that the with bringing the security or not in the back. I mean controlling the Strait of Hormuz or not. Whatever happens, they can conclude the war, and it's a totally separate uh, project. I mean, he is separating the Strait of Hormuz with ongoing war in Iran. Sounds like he is trying to use the Strait of Hormuz against its allies in Europe, especially in he didn't have never had a good relation with the NATO. As Peter Higgs, it also last us say that after Iran war, we should sit and think whether we want to be good ally with we want to be in the same ally with the NATO members or not, as it's not as strong as it was before, and it's not a bit so much beneficiary. I mean, it doesn't bring enough benefits for United States, while they are paying the biggest part of the cost in a NATO. So let's see what's going to happen. But what we can see in the region and what we can see geopolitically, the war. I mean, the market at least has this positive reaction that war can be ending next to 3 weeks. Last night we know that we had again very hard attacks, very hard attacks. One of the hardest night that they had attack in Iran. They bombed much more than previous days, especially with the some infrastructures as well. While the Israelis says that these infrastructure has been using have been using for missiles, the military purposes. Anyway, the war is still, I mean, yeah, the market risk is down. The VIX now around 24, while it was 29 and 30 yesterday. Shows that the market risk is still is a little bit low, while WTI is down around $98, while the Brent oil is around $104. We know that the gas also around 2.4, $2.8. And all this happens. U.S. bond yields again under 4.29%, something like that, and even slightly between 4.29 and 4.30%, slightly just like up and down, but generally down from the previous days, showing that the generally market risk premium is down. And we could see very good reaction in the stock markets. Last night we had US I mean the Wall Street in totally green area. Yesterday, Dow Jones increased by 0.6%. Nasdaq also the same, but S&P 500 also the same, but Nasdaq increased rapidly. That shows that the market is counting on really counting on a great increase in the markets. But I mean, market counting on the fast close in the market. Then that's why the Nasdaq gained by more than 3.8% last night. Dow Jones 2.9%, 2.5%, S&P 500 2.9%, and in the future market, as mentioned, S&P 500 and Nasdaq, S&P 500 and the Dow Jones, they are gaining by 0.6%, while the Nasdaq again increasing by almost 1% after 3.8% gain of last night that we had. Generally, the market is positive right now, but looking while all this happening, looking at the news, looking at the data, while we know that the new U.S. navies started. I mean, they have been starting movies actually in the previous days, but now we had the news that two new navies that they have been staying around Japan. Now they are on their way towards CENTCOM territory, towards the Persian Gulf, and coming towards Iranian borders. That shows that we know that the U.S. already deployed more than 10,000 armies in the region. All these data, all these numbers, and all these news showing that despite the positive news that we have, it sounds like Donald Trump trying to control the market now gives them hopes between 2 and 3 weeks, and then after 2 3 weeks he can find some other reason, but to keep the market positive and not losing too much. That sounds like this because when you see that they made much more much more armies deploying in a region, you can't just say that okay, you're coming there for to have a fun, or that's the good weather in the Middle East right now, so let's go there and have some fun. No, it's not about that. I'm pretty sure that they are going to have some plan there. So wait for the higher geopolitical risk in the next days. That's why, especially in the weekend, while that it's going to be a longer weekend, we have to be a little bit more careful about the positions, the value of the positions, stop loss and take profits. Be careful about that. In commodity markets, as mentioned, the gold is gaining by more than 1.3%, now trading around 4,000, about 4,750, $760. The silver above $74. That's while you can see just like the oil, Brent oil trading the Brent oil $19,963 under $100. That's amazing. And crude oil is trading around $97. That's amazing number that you can see here. Anyhow, the market is positive in thinking about maybe the war can be concluded faster, which I'm not so much positive about that. The same positive reaction that we had in the stock markets, we can see in the cryptocurrency market as well, with the Bitcoin trading again above $69,000 and Ethereum back above 2,100, almost $50. Why that happened? Because bond yields eased. U.S. bond yields for 10 years bonds is to 4.26 currently. German yields in the German is to 2.94. In Japan, we can see yields for 10 years bond at 2.29, and in United Kingdom at 4.73%. That's what's happening in the market, and with lower risk premium in the market, we can see that the market is positive about geopolitical tensions. VIX now slightly up and down after just like earlier rapidly fall. It's around 25.2 with more than 17% weaker, I mean lower risk. I mean the VIX down is more than 17%. So the market is that. I mean that's the market situation and what's happening in the market. Looking at the economic calendar and the numbers and data that we had yesterday and today so far also would be important. Let's say after yesterday updates, the one of the most important surprises that we had, it was the U.S. Inventory crude oil inventory reports that we had in the APR report with 10.26 million barrels. 10.26 million barrels, more than that. Increase in the U.S. inventories, oil inventories across based on the APR weekly reports for the previous week. That shows that despite the lower supply, global supply, U.S. inventories is still high, and Americans are trying to keep themselves in a safe area. On the other hand, we had inflation numbers, which the Eurozone inflation numbers was at the central stations, with the consumer price index increasing by 2.5% annually, and core inflation eased to 2.3% from previous 2.4%. Both of them, they were less than expected, but I'm not sure that can. I mean, they are the we can say primarily numbers, but I'm not sure that in the final numbers we can confirm that or not. I probably can see the higher numbers. And don't forget that It's not totally affected by the energy price yet. Still, the next data will show maybe even the higher numbers and those chances that we were talking about. The maybe that we can see for the European Central Bank to for 25 basis point rate cut. Now we can say totally is disappeared here, and we cannot see any rate cut for the European Central Bank outlooks. But don't forget that inflation on the monthly basis, even thought on annually, it was less than expected, but on the monthly basis, European inflation increased, the consumer inflation increased by 1.2%. That's very big number, twice more than what we had previously. We had German retail sales weaker than expected. Unemployment rate in Germany also showed that 6.3%, same as expected in the previous months. Turkish unemployment rate also increased to 8.5% from previous 8.2%. Yeah, that was in the United States. Looking back, I mean, going back to the United States, I have to mention that Red Book retail sales on annual basis last week increased by 6.9%. Amazing, amazing. Much more than expected, higher than 6.7% of of previous week. And this is while the house price index in January increased by by 1.6% annual and 0.1% only on the monthly basis. That was 1.9 and 0.3% annually and monthly basis in December, showing that the the house price is somehow under control in the United States. Another surprise that we had yesterday, it was on the CP consumer confidence, while the market after these geopolitical escalations, geopolitical tensions, market was expecting to see the CP consumer confidence to ease to 87.8. It increased to 91.8 from previous 91. It's like the market is get really surprised with these numbers. That's why GLT's job opening is to 6.88 millions from previous 7.24 million, showing that the labor market is still under pressure, even though the numbers are not that much that's bad and that weak, but still the market is somehow under pressure. Today, so far, the South Korea surprised us while we know that Kospi in South Korea today gained almost 8.5%. Then looking at the reason why that happened, we can see that the South Korean export in March increased by 48.3%. This is why the imports increased by almost 13%. That shows that why we should be a little bit more positive on South Korea's stocks. 8.4% gain so far, so far today. That's amazing numbers. That's amazing numbers for the South Korea. That's why we can see. That's why we can see there's such a big and huge movement in the stock markets in South Korea. Japanese tanking large and small. Big and small business surveys shows that generally the business activities were good in the first quarter in Japan. It shows that generally we can be slightly positive about that. In Australia, building approval increased by 29.7% after last month, after January's fall of 7% on the monthly basis. Annually, it increased by 14% after the previous months of more than 15% drop. In China, we had China's retail sales increasing by 0.9% almost in February. That was disappointing, while the manufacturing PMI also eased to 50.8. Not such a good numbers for China. After some good numbers that we had in the previous months, those numbers can be disappointed us. In Spain, we had markets manufacturing PMI down to 48.7%, 48.7. Later today, we will have the manufacturing PMI numbers from other European and generally from most developed and developing economies. Later today, we're going to have this one in the United States. NBA 30 years mortgage rate again expected to increase slightly, around 6.4%. And for the third week in a row, we can see probably the NBA mortgage applications can be eased weekly basis. So that's uh, what happened generally in the market last yesterday and our expectations for today. Same for same as other economies. Today we're going to have PMI numbers from United States, but despite the other, I mean, for especially for Europeans that we had and expecting to have the weaker PMIs, most probably United States will have a stronger PMIs as especially in the manufacturing sector as the manufacturing military, I mean, military-based, military-related stocks actually increase, and most probably we can see because of the more production that more production that they had, so that can increase the manufacturing PMI as well. While later we're going to have the EIA weekly reports as well for the official inventory numbers. Putting all these numbers and data together, we can say at least for next 24 hours, we can be slightly again positive about the stock markets, while the gold and silver price can increase. Oil price cannot be fall too much, but slightly more down. I haven't thought that was so good so far. And the US dollar index can still hold above 99, but can be lower than previous days levels. That's why we can see currencies against or against US dollar like euro, like pound, can be in slightly better positions. That's what happened and what we are expecting to see in the market. Hope it was useful for you. Talk to you tomorrow. Have a good day. Bye bye.